Imagine this. You're fresh out of college, rocking a $200 haircut and a $2,000 suit, walking into an office where the lights never turn off and the coffee's basically an intravenous drip. Welcome to the world of investment banking, where you can earn six figures right out of school, lose all concept of weekends, and develop a lifelong trauma response to excel. But before you start fantasizing about million-dollar bonuses and high-rise apartments, let's get one thing straight. What do investment bankers actually do? No, they're not traders. They're not screaming buy into phones or playing financial DJ with Wall Street's hottest stocks. That's a totally different department. Investment bankers are the power brokers, the behind-the-scenes deal makers who engineer the billion-dollar moves you hear about on Bloomberg. If capitalism were a reality show, they'd be the producers pulling the strings while everyone else performs on stage. Their job? Help companies raise capital, buy each other out, go public, or avoid total financial catastrophe. They're like corporate matchmakers, except instead of love, they're setting up mergers, IPOs, and buyouts. And instead of a dating app, they use spreadsheets. And they charge a lot for the privilege. Let's break it down. Investment bankers specialize in four core things. First, mergers and acquisitions, or M&A. That's when one company wants to buy another, or maybe two companies want to become one big happy conglomerate. Bankers handle the valuation, the negotiations, and make sure nobody ends up accidentally buying a dumpster fire. And of course, they pocket a nice fee, typically 1 to 2% of the deal. Doesn't sound like much until you realize the deal is worth $10 billion. That's up to $200 million just for playing corporate counselor. Second, IPOs, initial public offerings. This is when a private company decides it wants to go public and sell shares to you, me, and your crypto-obsessed cousin. Investment bankers figure out how many shares to sell, at what price, and handle all the legal and regulatory hoop jumping. And they take a cut, usually around 5 to 7% of the money raised. So yeah, if a company raises $1 billion, the bankers walk away with $50 to $70 million for doing math. Third, debt and equity financing. Sometimes companies need money but don't want to go public. Maybe they're trying to expand or avoid bankruptcy. Whatever the reason, bankers step in to help them issue bonds or debt, or sell a chunk of the company, equity. The bank connects them with investors, takes their cut, and everyone pretends it's not just very expensive networking. Fourth, financial advisory. CEOs love to get second opinions before making big moves, especially when those moves could cost billions. So they pay bankers millions to crunch the numbers, build 100-slide PowerPoints, and say things like, based on our analysis, acquiring that logistics firm might increase EBITDA by 8.4%. Is it groundbreaking stuff? Not always, but it is profitable. Now, let's talk about pay, because let's be honest, that's why most people even consider this lifestyle. Entry-level analysts make anywhere from $100K to $150K. That's just base salary. Move up to associate, $150K to $250K. VP, $250K to $400K. And managing directors, $400K to $1 million before bonuses. Yes, before. See, the real money is in bonuses. Bonuses can double your salary if you're killing it. An analyst making $120K might get a $100K bonus. A VP could pocket another $300,000. And if you're a managing director who closes a huge deal, you could see a $5 million bonus in your inbox, just for getting someone to sign on the dotted line. But here's the fine print. You have to earn it. And by earn it, we mean sacrifice your life. We're talking 80 to 100-hour work weeks. That's not a joke. You'll be responding to emails at 1 a.m., updating PowerPoints in the back of an Uber, and triple-checking Excel formulas like your life depends on it. Because in a way, your bonus does. And yes, people have actually slept at work. Nap rooms in banks are real. Not because it's cute, but because people literally don't have time to go home. You'll skip birthdays, cancel dates, and forget what weekends feel like. It's not a job. It's a full-blown endurance sport. The stress is wild. One mistake in a financial model can cost the firm millions and possibly your job. Analysts are expected to be flawless. Associates are expected to lead. VPs are expected to juggle a dozen deals at once. And managing directors? They eat pressure for breakfast. And yet, people do it. Why? Because once you survive the grind, the doors it opens are ridiculous. Many jump into private equity where you work fewer hours and make more money. Others go to hedge funds, betting billions on market moves. Some move into corporate finance, becoming CFOs of major companies with normal hours and impressive pay. And a few decide to go rogue, launching startups, investing in tech, or becoming venture capitalists who throw cash at the next Uber or Airbnb. Investment banking is a launchpad, an exhausting, intense, sometimes soul-sucking launchpad, but a launchpad nonetheless. You'll meet power players, you'll get access to deals the average person never sees. And yeah, you'll probably develop a nervous twitch every time someone mentions Excel. But the trade-off is real. So, is it worth it? That's the million-dollar or sometimes multi-million-dollar question. Some people thrive in that environment. They love the rush, the chaos, the money. Others burn out in 2 years and run screaming into a job with actual daylight. Now it's your turn. Would you trade your free time and social life for a shot at a giant paycheck? Or would you rather make less and actually enjoy your 20s? Drop your thoughts in the comments. We want to hear from you. And if you found this breakdown helpful, hit that like button like it's your annual bonus. Subscribe for more fast, fun, brutally honest looks into the world of careers, money, and what it really costs to make it. Next time, we're diving into hedge fund managers, the financial rock stars who work fewer hours and pull in even bigger checks. You don't want to miss it.